In this video, we're going to review two Padsplit locations, kind of walk through the market analysis to help you to make a decision on whether, a single family rental property that you have, you could turn it into a co-living or a Padsplit type of property. So we're going to actually take you behind the scenes of a private member call that we have, where we had some folks from Padsplit on and kind of walking you through some market analysis.
Anywhere else. So we did want to highlight specifically at this point two Florida markets and give some insights on the types of members that are moving into the properties. But this is almost the same thing in any market. If you go to Houston, you might have more of a NASA presence. If you go to San Antonio, you might have more of the military presence. The workforce changes per market, and obviously a New York City demand is different than a Kansas City demand, but a demand is still a demand, and renting by the room still makes you more money. So we're going to compare now. When we look at the Orlando market, we did a presentation where we showed March's numbers. And on the very next slide, we're going to show you how it's increased and what's changed month over month. No, it was a month. Yeah, it was a month. This is what you're seeing on padsplit.com, and this is the data that we provide you. It shows you what the average weekly rate is. It shows you what the private bathroom can go for, occupancy as a market, occupancy for zip code, as well as how fast it takes to book the first room, and 80%. And the special one right here, demand, you'll see that there's 11,000 people searching on padsplit.com in the last 30 days, with only 957 rooms active in all of Orlando at that time. So if we were to go skip ahead, remember 957 rooms, 80% occupancy. We added about 100 rooms and the occupancy went up to 81%. The weekly rate went up. The days to 80% of occupancy went from 32 days to 30 days. So it's not that we're saturating, it's just that we're filling up the map further and we're increasing demand to fill up these rooms based off the jobs that are in that vicinity.
I wanted to also highlight that the map has different colors, right? You see blue and you see gray. Anything that you see in blue is we actively have Padsplits in that zip code. If it's gray, we currently have investors that are committed to onboard a property in this specific zip code within the next 30 to 90 days. And the natural course of this map is going to be completely blue, right? Of course, this is Orlando Metro, but we do cover areas like DeBary, Deltona, DeLand, Daytona, but that would be considered a separate market.
In this one, to show you Tampa, we have 700 more rooms in Tampa. It's an older market for sure. I believe Jacksonville and Tampa were the first two that I opened 4 years ago. And then Orlando came after, and then Miami. So a head start, but 1,700 rooms, 19,000 people searching, and a 94% occupancy across the metro market. And 5 days to first book and 24 days to 80%. Faster than Orlando, which shows you that their sister markets, very similar, and there's room to grow and the demands. And we'll be able to talk about any market that you're looking to do as long as it's a core market, and we're able to give you the same exact data. But now to give you an idea and some insights on who is moving into these pad splits. When we're analyzing a market and trying to figure out where to buy pad splits, it should be based off of who's moving into these properties. These are the 5 industries that are the biggest in Central Florida. I mean, I'll read it out: healthcare, leisure, hospitality, education, retail, and construction. And that's the population size per. And in order to qualify for a $1,600 studio apartment, you need to make $69,000 in a year. That's 3 times the rent, times 12. So 4 of these industries cannot afford to live in Central Florida based off of those standards. We don't need all 200,000 of these people to fill these rooms. Again, there's about 1,000 rooms in Orlando. So when someone goes, Ray, where do I go ahead and buy pad splits? Well, if you're looking at any market, look towards, in this example, retail outlets, malls, shopping centers. If you're thinking hospitality, if you're in Miami, wherever there's casinos, wherever there are clubs, restaurants, all of those things, convention centers are all great. Those people are probably not going to be able to qualify for an apartment with a $40,000 income. Do I go through? No, I don't. We kind of skipped on this. But yeah, you primarily want to look at wherever these job sources are. If you have 6 rooms available in a market and you're near a big shopping center, it's only 6 rooms. There's hundreds of jobs. It doesn't take much of them.
It's real estate, right? Your location will determine the members that you will be appealing and attracting to. So if you have a location where there's not a lot of jobs nearby, you might struggle a little bit more to get it rented if you are in close proximity to some of these major jobs. So location still makes a difference. It matters when we're trying to book those rooms for you.
And
That's the one thing I saw on your guys' map that was surprising to me. Like where you had blue in Tampa didn't surprise me, right? That was more population based, probably where the jobs were. But yeah, if you zoom out, there's some rural areas here that you have potential properties coming on board. And in my mind is like, again, Paul, when we were looking at this like last year, looking at areas, we were trying to be near the main retail corridors, but I'm trying to figure out in my head, these people that have properties coming in the grays, what the heck is out there? I feel like it doesn't evolve with the model. Do people have to invest in kind of rural one-offs?
Yeah, that's what it is mostly. So when you're looking at, I'll pick a place, Wesley Chapel. Are there Walmarts there? Yes. Is there a Target there? Yes. Are there shopping plazas? Yes. Are you going to be able to get as dense as East Tampa? No. By no means you're going to be able to get as dense. But if you do only have 30 units or 50 units, those are only 50 bedrooms in an area that still has shopping plazas and a retail space. But if you're in, what do I like to pick on? It's Brooksville. So Brooksville, I didn't see it on the map, but Brooksville, there's farms, there's agriculture, there's still some plazas and stuff like that, but I'm not going to go ahead and expect higher weekly rates in Brooksville with a higher occupancy because of the fact that it's just not sustainable. If it's already a cheaper market, like Frostproof, for example, you can already find affordable living in Frostproof. There's no one living in Frostproof. You probably shouldn't put a pad split. You'll need way too many rooms to have a good ROI.
Do most your average tenants in your markets own a vehicle, or are they using public transportation?
60% of our members own vehicles, 40% of them do not. Another reason why choosing a location that has proximity to public transit is important. And let's utilize one of those more rural areas, then anticipate to have every single parking spot available for the rooms that you have. But if you're closer to public transit, you only need half, right? It's kind of the take for it. But we've noticed that those rural areas, like we were mentioning, Michael, they're still successful, but you just won't achieve as much demand or as much pricing, right? But you're not going to have 500 units in there. You might have like 10 or 15 or 20, but we'll see how we continue to evolve.
And alternatively, if you're in a downtown area, you probably already don't have parking. There's already parking garages. And because there's no parking, or you need permits for parking, like at DC or downtown Orlando or Channel Side out in Tampa, all these markets, you already have jobs around it. People are probably walking over to their job. So you don't need any parking at that point.